Hello, wonderful people. My name is Nitin Mohar. I welcome you all on behalf of JK Shah Classes. This amendment lecture for CA Final, September 2025. Now, this amendment lecture covers data from 1st November 2024 to 28th Feb 2025. Whatever amendments have taken place between 1st November 2024 to 28th Feb 2025 is covered here. Note that major amendments had taken place through Finance Act, which came into effect from 1st November 2024. All those amendments are also covered in this. Those amendments are already there in May 25 study material. Plus, Institute has released a statutory update. So, two things combined together is these amendments. Let's now start understanding each and every amendment. Now, the first amendment is two entries which are added additionally in negative list. The negative list has two additional entries which have been added. Let's understand these two additional entries. See this very carefully. Now, say suppose we take an example of HDFC Life. HDFC Life is providing services to customer. Now, HDFC Life charges something called as insurance premium. Say, suppose this insurance premium is 10,000, GST 1,800, total 11,800. So, HDFC Life has charged GST from the customer. Fair enough. Now, there is a concept called as co-insurance. What happens in case of co-insurance? In case of co-insurance, HDFC Life has a prior arrangement. What is that arrangement, sir? The arrangement is that there will be a sharing of this premium of 10,000 between HDFC Life and LIC. So HDFC Life has said, whatever policies I sell under this particular agreed policy type, 40% of the premium will go to you, 60% I will keep. That also means that when a claim arises, 40% will have to be paid by HDFC Life, LIC will bear it, and balance HDFC Life will pay from his pocket. Now, HDFC Life is called as the lead insurer, and LIC is called as the co-insurer. So co-insurer will get 40% of this premium. So co-insurer is providing service to HDFC Life and getting a co-insurance premium. So basically it is apportionment. Now this, say suppose it is 40%, then 10,000 into 40% will come to 4,000. The question was whether this apportionment of 4,000 should it be liable to GST? Should GST be applicable on this 4,000 rupees? Now, negative list entry has been added to say that co-insurance premium will not be liable to GST. No GST, sir. No GST. Co-insurance because it is merely apportionment. And the law also very clearly provides that co-insurance premium will be outside GST only if lead insurer has paid full GST on the insurance premium which is charged from customer. The lead insurer has paid full GST on the insurance premium which is charged from the customer. Then co-insurance premium will be covered under negative list. Please understand it very carefully. Co-insurance premium is under negative list if the lead insurer has paid GST on full insurance premium which is charged by him to the customer. And what is customer called in these cases? Customer is called as the insured. Here with yes. Okay, this is the first one. What happens in co-insurance? There is a prior arrangement that there will be a sharing of insurance premium and claim, that is risk and rewards between co-insurer and lead insurer. That is the agreed terms. Clear? Okay. Now let's talk about the second case. The HDFC Life is providing services to customer. Insurance premium charged 10,000, GST 1,800, total comes to 11,800. In this case, there was no prior arrangement. So, no prior agreement that this much will be shared, nothing like that was done. The entire premium was collected by HDFC Life, entire risk was on HDFC Life. But after some time, HDFC Life realizes that they have issued a lot of policy. Now, when they come to know that they have issued a lot of policies, which is more risk being taken by HDFC Life, then they go for reinsurance. Reinsurance, what happens in reinsurance? Some premium will be shared between HDFC Life and LIC. This was not prior arrangement. See, in co-insurance, duty of co-insurance is there is a prior arrangement. It is already known that this much percentage will be shared. But in reinsurance, this happens at a later point of time. Once certain number of policies are issued, then HDFC Life feels that no, I have to reinsure because there is too much risk on me. Then in that case, they go for reinsurance. Now, reinsurance is again a method to reduce the risk. Now, here LIC will charge reinsurance premium. HDFC Life is called as the insurer, LIC is called as the reinsurer. So, say suppose reinsurance premium is 3,000 rupees. On this 3,000 rupees, entire industry was paying GST. No problem at all. This 3,000 was clearly suffering GST without any. So LIC was charging HDFC Life. Compare this with co-insurance. Co-insurance, GST was not being charged, and that's why government said let it be in negative list. If on 10,000 I have received full GST. But reinsurance, as it used to happen at a later point of time, and it is not apportionment, it's a service which LIC is providing to HDFC Life. On reinsurance, GST was being charged by the entire industry. Then where is the issue, sir? Let me tell you. See, when HDFC Life sells the policy to customer, it sells it through a agent. Now this agent will charge commission. So HDFC Life has suffered commission charges which they have paid to the insurance agent. So HDFC Life used to say that LIC, I am helping you getting reinsurance business. I am providing you service, and for that you have to pay me reinsurance commission. Huh? You have to pay me reinsurance commission. See, understand this again. Who is doing the reinsurance? LIC is providing service to HDFC Life of reinsurance. HDFC Life is saying, see, I got you this business now. You should pay me some commission because whenever I sell policies to customer, insurance agent charge me commission. I should also get some commission in this. Now, this is a practice that reinsurance commission is paid. Say, suppose 10% is the reinsurance commission on this 3,000. 10%, which comes to 300. Now this 300 is the commission which is earned by HDFC Life from LIC. Now the question was whether this reinsurance commission is liable to GST. Government said we will cover this in list because entire industry was not paying tax on this and lot of notices received. One of the biggest reinsurer is LIC. LIC also had received notice on this. Finally, government reinsurance commission with their negative provided. People listen to it very carefully. Reinsurance commission will be under negative list if reinsurer has paid GST on full reinsurance premium without deducting the insurance. If reinsurer has paid full GST on reinsurance premium, then in that case, reinsurance commission will not be liable to GST, be covered by negative. Now, please understand the difference between both. Now, co-insurance will seem to be easy. Co-insurance is merely apportionment, correct? As it is merely apportionment, there will not be any GST on entire amount, correct? So, co-insurance, GST will not apply on co-insurance, and the only condition is insurance premium should have suffered full GST. In reinsurance premium, what happens is reinsurance premium, there is GST being charged. The question was whether reinsurance commission should be liable to GST. Now, negative list entry has been added that reinsurance commission will not be liable to GST if reinsurer has paid GST on full reinsurance premium without deducting this. Clear? Let me put it in words. Co-insurance premium is not liable to GST. Co-insurance premium is not liable to GST if lead insurer has paid GST on full insurance premium. Second, reinsurance commission, careful, reinsurance commission will not be liable to GST if reinsurer has paid GST full reinsurance premium charged from the insurer. Be very careful on the word. Institute can ask you different type of questions. They can ask you a question of HDFC life where you will have to explain this and this. They can ask you a question of LIC where you have to explain co-insurance treatment, reinsurance premium treatment, reinsurance commission earned by HDFC life treatment of that. So you pause the video and draw this. First you this in drawing, then let's have a look at the entry. I hope you have paused the video, you have drawn it patient. Okay. Now let's see the entry. Two entries added in negative list. Activity of apportionment of co-insurance, that is that 40% apportion by lead insurer to co-insurer for insurance services jointly supplied by lead insurer and co-insurer to the insured in co-insurance agreement subject to the condition that lead insurer pays central tax, state tax, union territory tax or IGST on the entire amount of premium paid by the insured. If entire amount GST is already paid, co-insurance apportionment liable to GST. Okay, let's see the next one. Services by insurer to reinsure. Who was insurer in our case? HDFC Life. To LIC for ceding commission. Reinsurance commission is also called as ceding commission because it is given because the other party is ceding some share, giving up some share. For ceding commission or with ceding commission or reinsurance commission is deducted from the reinsurance premium paid by insurer to reinsurer. Who makes the payment? Insurer makes the payment to reinsurer, subject to the condition that GST, SGST, UTGST, IGST paid by reinsurer on the gross reinsurance payable by insurer to reinsurance, inclusive of in commission or insurance commission. If GST is paid on full gross reinsurance premium, then reinsurance commission will not be liable to GST. Yeah. Okay. Then second point, let's understand. See, 9 subsection 1 charging section excludes one product. Which is that product, sir? That product is alcoholic for human consumption. Remember this? Yeah, very well. There is no GST on alcoholic liquor for human consumption. Now, say, suppose my friend Mr. A is selling alcoholic liquor for human consumption. Then there is no GST here. Correct. There is no GST on alcoholic liquor for human consumption. Now, let's talk about the important raw material for alcoholic liquor for human consumption. The most important raw material for making this is undenatured extra neutral alcohol, extra neutral alcohol or rectified spirit. This is the basic raw material to make alcohol. Now, this was liable to GST because it was not excluded in charging section. It was not excluded in charging section, so GST was applied here. Now, if you apply GST here, what happens? Mr. A will not get ITC of this GST. Why will Mr. A not get ITC of this GST? Because this is not liable to GST. There is no output. As there is no output, this will not be available as ITC. So ITC is not available. You know what happens? ITC is not available. Then the GST paid on purchase becomes a cost, and as it becomes a cost, this was leading to lot of difficulty for alcohol industry, because even though alcohol does not suffer GST, indirectly it was suffering GST in the way of raw materials. Now government has put this under no GST. 9(1) now has two products which are not liable to. First, alcoholic liquor for human consumption was already there. Now they have added undenatured extra neutral alcohol or rectified spirit. GST will not be applicable for a simple reason that most important raw material of alcohol should not suffer GST. And if you see the wordings of law, the law says undenatured ENA or rectified spirit will not be liable to GST only when it is used for manufacture of alcoholic liquor for human consumption. So when will it be outside GST? When it is used for manufacture of alcoholic liquor for human. That means if this is used to make medicines, then it will suffer GST. Remember, this undenatured extra neutral alcohol or rectified spirit will not be liable to only when used for manufacture of alcoholic liquor for human consumption. In all other cases, this product will suffer GST. Be very careful on this. Exact wordings has to be remembered. Thus, practice saying this undenatured extra neutral alcohol or rectified spirit. You'll get used to it. Don't forget, this is outside GST only when is used for manufacture of alcoholic liquor for human consumption. Let's have a look. ENA not liable to GST. It is excluded from charging section along with alcoholic liquor for human consumption. 9 subsection 1 is amended to exclude undenatured extra neutral alcohol or rectified spirit which is used for manufacture of alcoholic liquor for human consumption from the levy of undenatured ENA will be excluded only when this sentence is up. Okay. Then we have a circular on clarification with regard to treatment of vouchers. Now, there was a Karnataka High Court judgment which had said that vouchers will neither be goods nor service and there cannot be GST on vouchers. GST is always on underlying goods or services which are purchased using the voucher. This was the Karnataka High Court judgment. It was creating a lot of issues because our department officers were always of the view that vouchers are liable to GST. There's a time of supply also for vouchers. Vouchers are liable to GST. The sale and purchase of vouchers is also liable as per department. Now, CBIC has clarified the entire position. Let's understand. See, vouchers are of two types. One is PPI, prepaid instrument. Prepaid instrument. PPI is recognized by RBI. As it is recognized by RBI, it falls under the definition. As it falls under the definition, there is no question of GST because money is neither goods nor service. So, CBIC has clarified that if a voucher is a prepaid instrument, again, prepaid instrument. If it's a prepaid instrument, then in that case, the money first RBI recognizes PPI goods nor service. Then what if vouchers are not recognized by RBI? Then in that case, CBIC has clarified that it's a actionable claim. Actionable claim is covered by a list. So if you see this, what government has concluded is vouchers not be liable to. Sir, then what about the time of supply, which we learn in time of supply chapter? Identifiable date of issue, non-identifiable date of redemption. What about that, sir? Finance Act 2025 has deleted that time of supply, but it is yet to be made effective. So for September 25 exam, time of supply provisions of vouchers are there. But whether GST is applicable on vouchers? No, because the prepaid instrument, their goods or service, it is not a prepaid instrument. It's an actionable claim by essence, vouchers or GST. Now, in case of vouchers, there can be two types of transactions. One is principal to principal. And second one is principal to agent. I will explain you what is the difference between principal to principal and principal to agent. Principal to principal meaning purchase and sale of vouchers. Purchase and sale of vouchers. Purchase and sale of vouchers. Now, purchase and sale of vouchers, no GST. Because if you purchase and sell money, there cannot be GST. Secondly, if it's not PPI, then also it is actionable claim, and actionable claim is neither goods nor service. Correct? Yes. Yeah. Now, when it comes to principal agent relationship is where someone is selling it and agent is charging commission. Now, whether GST should apply on the commission which is charged for purchase and sale by two persons. See, A and B are buying and selling vouchers. C is only charging a commission for helping or arranging this transaction. Commission, government has said, will be liable to GST. Commission will be liable to GST, but purchase and sale of vouchers will not be liable to GST. So, principal to principal basis, purchase and sale of vouchers are outside GST. Principal to agent, where agent charges a commission, then in that case, that commission is liable to. Then, what about a case where there is some marketing fee or some promotional charges? Some advertisers are charging for promoting that voucher, marketing those vouchers, or advertising those vouchers. These fees are separate supply. These fees be liable to GST. So obviously, the exclusion is these two are only for vouchers per se. Any service ancillary or incidental to vouchers that will still be liable to GST. Fair enough. Okay. Then the last discussion is what if voucher is not redeemed? Breakage. If the voucher is not redeemed, then in that case, there will be no. This is clarified that there will be no GST if the voucher is not redeemed. Reason, sir? Reason is very simple. If it is not redeemed, basically there is no supply of goods or services. As there is no supply, there will not be any GST. All this is clarified by CBIC. Four things. First, is GST applicable on vouchers per se? Principal to principal, anyways, no GST. Principal to agent, GST will apply only on the commission portion. Marketing fee or promotional fee, obviously GST will apply. If it is not redeemed, then there is no question of any G. Clear? Okay. Let's read the circular and thereafter, if you want, you can just come to this and take a note of this much because this is the entire gist of this particular circular. Okay. Okay. Before we read this, you can take a minute's time and read these two. I've explained this to you, but just have a look. You read it once. Done? Okay. Okay. Now let's see clarification on various issues pertaining to GST of vouchers. First one, whether transaction in vouchers fall under the category of supply of goods or supply of service. From the definition of vouchers, which is under two subsection subclause 118 of CGST Act, it emerges that vouchers may be the nature of payment instrument that create an obligation on the supplier to accept it as consideration or part consideration for supply of goods or services. PPI, as defined by RBI, are payment instruments that facilitate the purchase of goods or services against value stored in such vouchers. A combined reading of vouchers, money, and PPI as per RBI indicates that voucher is that where a voucher is recognized as PPI by RBI and is used as consideration to settle an obligation, it qualifies as money. Since money is excluded from the definition of goods and services, such transaction in vouchers would be considered neither as supply of goods nor as supply of services. In cases where vouchers are not recognized as PPI, it remains an obligation on the supplier to accept it as consideration, allows the beneficiary to claim specified goods or services. Such case, vouchers are actionable claim. And as per entry number 6, schedule 3, actionable claim are neither good supply of goods nor supply of service. Therefore, it is clarified that irrespective of whether a voucher is a PPI recognized by RBI or not, it is merely an instrument that creates an obligation on the supplier, accept it as consideration. The transactions in vouchers themselves cannot be considered as either supply of goods or supply of service. However, the supply of underlying goods or services for which vouchers are used as consideration taxable under GST. Other services which are being purchased from that will obviously suffer GST. Okay. GST treatment of transactions in vouchers by distributor, sub-distributor or agent. See, distributor and sub-distributor is principal to principal, no GST. Agent, agent will merely arrange or facilitate and charge a commission that will be liable to GST. There are two primary models for distribution of vouchers. Principal to principal basis, where vouchers are sold with a markup, and then the other person will sell it for 950, 50 rupees markup added, next person will sell for 1000. Or commission or fee basis. Distributor, sub-distributor or agent acts on behalf of the voucher issuer and receives a commission. Now which one will be liable? Let's see. As per 9.1, GST is chargeable on supply of goods or services. Since trading of vouchers is neither supply of goods nor supply of service, P2P trading of vouchers is not subject to GST. Good, na? Always do P2P transaction. There's no question of GST or vouchers. Okay. Then where vouchers are distributed on commission or fee basis. In this model, transaction between voucher issuer and distributor are on P2A basis to agent. The agreement between voucher issuer and agent may involve obligations such as marketing, promotion, or other support. or distribution in exchange for a commission or fee. Since distributors do not own the vouchers, the act on behalf of the commission or fee is subject to GST. The supply of service, distributor or agent must pay GST on commission earned because it is on P2A basis. Okay. Third one is additional services such as advertising, co-branding, marketing promotion, customization, technology support. What about all these people who are providing advertisement, branding, marketing, and obviously GST will be applicable. If additional services such as advertisement, co-branding, technology support, customer support are provided by distributor or any other entity to voucher issuer for a service fee, GST is applicable. On all these things, obviously GST will be applicable. As per the contract or agreement between service provider and voucher issuer, the service fee affiliate charge for these additional services would be liable to GST at the applicable rate. Okay, last one is what about unredeemed voucher breakage? As there is no supply, there is no GST applicable. Consideration relates to supply. Unredeemed voucher do not involve supply, cannot be considered as consideration for a supply. Additionally, they have also given reference to circular which clarifies that there must be express or implied agreement to do or not to do something in exchange of payment. Since unredeemed voucher do not involve such agreement, non-redemption of voucher do not constitute the supply of service. The circular number 178 was agreeing to do something. There should be an obligation. Like just breach of contract cannot be regarded as a supply. There should be a positive agreement like non-compete fee. I agree not to compete against you for a fee. Then in that case, GST is applicable. But mere breach of contract or merely receiving something, if there is no underlying supply, GST will not be applicable. So therefore, no GST is payable on unredeemed vouchers. Here, okay, okay. Then the last circular in this series is penal charges, which is levied by banks. See, earlier banks used to call it as penal interest. Say, suppose a person does not pay interest on time, penal interest. Other non-compliance done by the supplier, penal interest. Who used to charge this penal interest? Banks used to charge this penal. RBI gave a directive that please don't call it as penal interest, call it as penal charges. So, penal charges are for breach of contract, whether GST will apply on charges. CBIC has clarified that banks charging this penal charges will not be liable to GST. Again, same circular reference, breach of contract will be regarded as a supply. Let's see. The issue was whether GST applies on penal charges levied by regulated entities such as banks and NBFCs as per RBI instructions. RBI directed regulated entities to discontinue penal interest for non-compliance with loan terms. Instead, levy penal charges with effect from 1/1/2024. These instructions, however, do not apply to credit card, external commercial borrowing, trade credits, and structured obligations. Since penal charges are for breach of contract, they will fall under that circular 78, which clarified that such charges do not constitute consideration for tolerating an act or situation. Therefore, no GST on penal charges which is levied by regulated. Who is this regulated entities? Banks. Who regulates them? RBI. So just mention banks and then they can give you such question. Penal charges levied by regulated entities, whether GST will apply? The answer is no, because there is no supply for consideration. Okay. Okay. Now coming to time of supply. Time of supply, only one change has happened. 13. Let me give you some background about this change which has happened. See this very carefully. Now, time of supply goods RCM. So time of supply for goods RCM is 31st day from date of invoice issued by supplier or date of payment or date of receipt of goods, and then the law says whichever is earlier. You can recall something. Goods time of supply RCM, first day from the invoice date issued by the supplier, payment date, date of receipt of whichever is earlier. Now service RC. Service RCM 61st day from date of invoice or payment date, whichever is earlier. Yes, sir, we are already aware of. We are already aware of. Correct. See, in RCM, there can be two cases. Supplier is registered person, supplier is unregistered person. Supplier is a registered person, supplier is a unregistered person. If supplier is a registered person, if supplier is a registered person, supplier will issue invoice. You are aware? So 61 days from the date of invoice issued by supplier. What if supplier is unregistered? Now, if the supplier is unregistered, who will issue? You recall something? Recipient will issue invoice, and this was called as self invoice. You remember? Recipient will issue self invoice. Correct. This was the provision. If recipient is issuing a self invoice, from where will you count 61 days? Because 61 days is to be counted from invoice issued by supplier. So if recipient is issuing the invoice, how will you count 61 days? This was the issue. The government changed it. Government said this provision, this one, will apply when supplier is registered person. That means he is liable to issue. Now, if supplier is unregistered person, if supplier is unregistered person, then date of invoice by recipient or date of payment, whichever. Careful, careful. So, if supplier is unregistered, recipient has to issue a self invoice. Whenever he issues that self invoice or payment date, whichever is earlier, a time of supply. So, we see three things are to be compared to derive time of 61st day from invoice issued by supplier, date of invoice issued by recipient if recipient is liable to issue, or payment date is earlier. Compare these three, get the time of clear. So I have broken it into two parts, but the law says to compare three things. Which three things? One, two, and three. But one and three, which you see on your screen, one of them will happen because either supplier is registered, then supplier will issue the invoice, even if it is a case of RCM. If supplier is unregistered, then recipient will issue a self invoice. So either one will happen or three will happen. So technically, these are the two cases for RCM. Plus, they have also given a time limit where recipient has to issue self invoice. They have said invoice provisions have been amended to say that recipient has to issue invoice within 30 days from the date of receipt of goods or services. So once you receive the goods or services, within 30 days, you are required to issue a as a recipient. Clear? But will that matter, sir? It will not matter if you don't comply with that. That's a non-compliance of invoice provision, which can attract a penalty, general penalty, 25,000 CGST, 25,000 SGST, or Section 122 also contains a penalty for non-issuance of invoice as per the requirement. Again, 25 up to 25,000 CGST, 25,000 SGST. That penalty may apply. But please remember, here they have not used due date to issue. They have merely mentioned date of invoice issued by recipient. So whenever recipient issues the self invoice or payment date, whichever is earlier will be the time of supply. Clear? Yes. Okay. Better you pause the video and first draw this. Then we will read it. Okay. Okay. Let's have a look. Time of supply. Section 13. Time of supply in case of RCM. Sir, has there been a change in section 12? No. Surprisingly, only 13 has changed. There is no change in 12. 12 remains as it is. 12 meaning, sir, goods RCM even today remains as it is. But, sir, in goods RCM also, recipient will do a self. See, I think the reason for not amending goods RCM is it already takes care of receipt of goods, which will automatically happen for sure. Maybe that is the reason they have not done it. It could also be a case where government has missed out pending it and they will do it in future. But as of now, goods RCM, there is no change. The service RCM provisions have been changed. But this self-invoicing applies for both goods as well as services covered under RCM. Okay. POS for RCM, where invoice is to be by receipt. Time of supply for services under RCM was the old problem. Payment date or 61st day from date of issue of invoice by the supplier. Now, if the supplier is unregistered person, they are not required to issue invoice. Obviously, if they are unregistered, what the need of issuing an invoice? In such cases, recipient must issue a self. Time of supply for services under RCM will be has been amended to cover this situation, and TOS will be earlier, circle earlier of payment date, 61st day from the date of issue of invoice or any other document. Other document may be bill of supply, composition dealer by the supplier in case where invoice is to be issued by supplier, or date of issue of invoice by recipient in case where invoice is issued by recipient. and this remains same. If it is not possible to determine time of supply under above clauses, then you will use the date of entry in the books of recipient. Whenever it is entered in the books of recipient, that day will be. This is same previous provision. Okay. Okay. Now talking about place of supply. One small circular has been issued, but the law already had this. Suppliers were not complying with it, and that's why CBIC had to come up with the circular. Let me explain it. See this carefully. See, online services like e-newspaper, Netflix. Basically, we are talking about OIDAR. Now, OIDAR, if it is section 13, one of them is outside India, buyer or recipient is out. Then 1312, OIDR, place of supply is location of recipient. There is no problem. If it is a case of section 12 of IGST, then we use 12 subsection 2, that is generally, because there is no specific provision for OIDAR. So we use 12 to generally. Now 12 to generally says if you provide it to registered person, then place of supply will be location of registered person. If you provide it to unregistered person, then place of supply will be location of recipient. If it is not available, if location of recipient is not available, then location of the supplier will be. If address is not available, then location of supplier will be used. Now, what these OIDR suppliers were doing, they were not taking location of recipient. Now, if you don't take location of recipient, what would be the place of supply? Place of supply will become location of supplier. Correct? Correct. Recipient states started losing revenue. I'll give you an example. Say suppose this OIDR supplier is in Maharashtra and he is providing service to Karnataka recipient. What should be the place of supply? Karnataka. Tax should flow to Karnataka. Correct. Place of supply should be Karnataka. Tax should flow to Karnataka. Correct. What they were doing is they were not taking this address. Now, if they are not taking this address, place of supply becomes Maharashtra, that is location of supplier. Karnataka started arguing, we are not getting tax, we are not getting tax, there's a problem, people are not paying tax correct. For this, what government has done is government has issued a circular. CBIC has clearly said in the circular, supplier has to make sure and take the address of the recipient in on online services. If it's an online service, it is mandatory to take the. You don't take the address, we will penalize you. There are penalty provisions of 120, but you have to take the address mandate. So this is what provided circular. More of a circular on procedural grounds, doesn't define any place of supply. It just makes sure that the tax correctly flows to the recipient state. Clear? In fact, the circular interestingly also covers online money gaming. But as you recall, online money gaming is goods. Question of second, well applying in. But anyways, they have made a general statement that for all online services, recipient state should be recorded by the supplier. So this circular is for the suppliers, that suppliers please record the recipe. Okay, let's have a look. Circular 242, clarification on place of supply for online service. Legal provisions. 12.2 states these services are supplied to registered person. Place of supply will be recipient. When it is supplied to unregistered person, It will be location of recipient if address is available on record. Location of supplier if address is not available on record. Now, what was the issue? Incorrect recording of place of supply. As per the law, supplier must record the recipient state name on the invoice and declare place of supply as recipient location. Should take the address under 12.2. However, many suppliers are incorrectly treating place of supply as their own location under 12.2. This misclassification is particularly prevalent in online services, including OIDR, digital subscription, online money gaming, leading to revenue misallocation among states. To ensure uniform implementation, board has clarified that supplier must literally record recipient state name, at least record the state name. Even if you don't take full address, no problem. Please record the state name regardless of transaction value for all online services to unregistered recipient. This requirement applies to online services, YDR, online money gaming, including e-newspaper, OTT platforms, mobile app-based digital service. Supplier must establish a mechanism to collect recipient state details before completing the transaction. Failure to comply will attract penalties under 120, which is 25,000 CGST, 25 SGST. Okay. Okay. Now let's move on to exemption. Some small changes have happened in exemption chapter. Plus one new section has been introduced. Section 11A. Now let's first understand this section 11A. Then we will talk about some small changes in exemption end. Okay. Now let me give you an example. Let's take an example of steel industry. Now steel industry as a whole, they were paying GST of 5% on scrap. The entire industry was of the view that whenever they sell scrap, and scrap of huge quantities, scrap which is generated by steel industry is huge. So on entire scrap, they were paying 5% G. Now, department was of the view that 18% GST should apply. So GST officers issued notice, and they issue to one steel player, then they will issue to all. Slowly and steadily, they issued notices to all of them saying that GST on scrap sales is 18. So there was a fight called as litigation. And in this litigation, there are various levels. First level of appeal, second level of appeal, then you have High Court, Supreme Court. So this matter traveled. And then High Court agreed to the stand taken by GST officer and said 18% is payable. Now this created a havoc entire steel industry because entire industry was taking a position of 5%. Now they have to pay 18%. The entire steel industry was worried with. They said that this is huge because they will have to pay 13% plus rest plus penalty, which will be huge. So have to pay all this. And entire industry was following this practice. Now there is a power. Government can waive this off using section 11. Is it, sir? And if they waive off the tax, interest and penalties automatically, because if there is no tax penalty on such tax amount, So central government has now been empowered with a special section 11A where if there is something which is a general practice in the entire industry and due to that general practice a tax was not paid, then in that case government can regularize that practice, say no need. Now there could have been one more case where they were not paying any GST on non-levy, and then the High Court has said 18. Then government can waive off entire 18. So if there is non-levy, then government will waive off full. If there is a short levy, then government has the power to waive off at third. Has government exercised this power till now, sir? No, government has not exercised it till now. But has the power been added? Answer is yes. There is a power available that in these cases, GST will not be happening. We are with yes. Okay. Okay. Let's have a look at 11A. Same provision added in IGST law, section 6A. And SGST, you don't read. Exemption 11A added in the law. Power not to recover GST not levied or short levied as a general practice. First of all, it overrides entire act, non-obstant clause. So strong non-obstant clause, it overrides all other provisions. If the government is satisfied that a practice was or is generally prevalent regarding levy of CGST, including non-levy. So some might be charging, some might not be charging anything. Entire industry is not charging on any supply of goods or services or both. And such supplies were or are liable. Entire industry was saying no GST, but there was GST applicable or there was a higher GST were liable to central tax in cases where according to the said practice central tax was not or is not being levied or a higher amount of central tax than what was or is being levied in accordance with the said practice. Government may, on the recommendation of council, by notification in the official gazette, direct that the whole of central tax payable on such supply or central tax in excess of that payable, but for the said practice, shall not be required to be paid. Shall not be required to be paid. Respect of such supplies on which central tax was not or is not being or was is short levied in accordance with the said practice. So as per the practice, if short levy or non-levy, then it will be good by government and government will issue a notification. Similar amendments made in section 6A of ST Act. Okay. Then let's see some changes or new entries in exemption. There's an entry related to National Skill Development Corporation. Now, this right, this is the amendment. Is it, sir? Yeah. Everything else is same. The NSDC, National Skill Development Corporation, gets an exemption. Assessing bodies get an exemption. Awarding body get an exemption. National Council for Vocational Education and Training also gets an exemption. While redrafting this entry, government removed training partner exemption. The NSDC training partners earlier they were exempt under the old entry. When new entry came, they missed out this training partner. So these training partners went to NSDC and said, "Why have you removed us? It's wrong. We have lost the exemption." Then have brought this matter to the finance ministry. Finance ministry again re-amended the entry that training partner approved by National Skill Development Corporation will be eligible for exemption. And in relation to is very wide because it says any other scheme implemented by NSDC, which is a very wide statement. What is added is only this a training partner approved by NSDC. This was there earlier, but in May 25 amendment, the entire entry was remodified. They missed out this training partner. Okay. Then in the next one, this word and has been replaced by or. That's it. So this is also a very new entry. Ancillary service to electricity. What is this ancillary service to electricity? Ancillary services like meter change charges, duplicate bill charges, meter shifting charges, all these charges, CBIC had said GST is applicable. Then government added this entry saying that GST is not applicable. Now when they added this entry, they mentioned and transmission and distribution utilities will get a exemption. Now if you write and, then the meaning is it should be transmission and distribution utility. So someone who is doing the job of transmission of electricity plus distribution of electricity. What about a utility which is only doing transmission job? Or what about a utility which is only doing distribution job? What about them? Then they have now amended, replace this and with or. So now all these metering, rent, testing, application fees, shifting charges, duplicate bill charges, all this will be exempt whether it is provided by transmission utility or it is provided by distribution utility. Both will enjoy an exemption. Okay. Then there is one fund called as motor vehicle accident fund. Now they get money from insurers. See, insurers collect third party motor vehicle insurance and they contribute some money to this motor vehicle accident fund, which will be then used to help people who have been injured or they have lost their lives in accident. So motor vehicle accident fund collects some money from the insurers. Now whatever they collect from the insurers, should GST apply on that? Government has given an exemption saying that motor vehicle accident fund collecting money from the insurers is exempt from GST. Let's see. Insurance services provided by who is supplier? Motor vehicle accident fund constituted under 164B of Motor Vehicle Act against contributions made by insurers from premium collected for third party motor vehicle insurance. Whatever is premium collected from third party motor vehicle insurance, that will enjoy a insurance. Okay. Now this circular is important. Now let me explain you this circular. People, do you recall a point which provided an exemption to acquiring bank to any person for swiping a card of up to rupees 2? Let me give you some background. See, whenever you use credit cards, you get points. But wherever you use that credit card, na, that person has to suffer some charges. He suffers charges, you get points. Who levies these charges? Acquiring bank. The bank who is going to remit that payment, the merchant. So bank to merchant. Merchant is where you are using that card. Say suppose you use that card at Shopper Stop. Shopper Stop is this person. HDFC Bank is going to charge Shopper Stop a fee for that credit card swiping. Now, if you swipe up to 2000 rupees, then charges are there. Say suppose charges is 20 rupees. GST is not there on this charges. Now you recall this entry. Okay. Now this was exclusive domain of banks. Banks used to set POS devices, point of sale devices, where you could swipe a card, or they used to provide some online platforms. Then came a player, Razorpay. Razorpay said, I will do this job for a lower amount. And Razorpay was approved by RBI as a payment aggregator. See, there are two licenses which a technology company can take: payment aggregator license, payment gateway license. You've heard of PayU? PayU is a payment gateway. Razorpay is a payment aggregator. What's the difference? A payment aggregator basically collects money on behalf of the merchants, stores it in its account, escrow account, which is regulated by RBI, and then gives that money to the persons. So it does the same job as a acquiring bank. So RBI has said Razorpay, though technically they are not bank, but they are payment aggregators, which gives them the authority as a acquiring. So as they are acquiring bank, the question was whether this exemption is applicable for Razorpay also. CBIC has said yes, Razorpay will also be eligible for the same exemption given to acquiring bank, because as per RBI, Razorpay is also acquiring bank. It is collecting the funds behalf of the person, storing it with them, and then transmitting. They are payment aggregators. They are eligible for the exemption. Now let's understand payment gateway. Payment gateway PayU, it just provides a gateway. Gateway meaning, sir, it just allows you to make the payment through it. It gives the technology. The money goes directly to the bank account of the merchant. Directly. It does not go to PayU. It only provides a gateway so that the money can directly flow to the merchant. Now, in this case, will payment gateway get this exemption? The answer is no, because anyways, they don't collect money on behalf of the merchants, and that's why payment gateways will not get this exemption, but payment aggregators will be eligible for this exemption. Clear? Yes. Ah, okay, let's read it. Clarification on GST exemption for payment aggregators on transactions up to 1000. There was a need for clarification on whether GST exemption applies to payment aggregators for facilitating transaction up to 2000, particularly in the context of RBI regulation, and their classification with payment within payment ecosystem. See the clarification. Payment aggregators enable online transaction by collecting payment from the customer. They collect it, pooling funds. They keep it with themselves, transferring them to merchants, eliminating the need of merchants to set up their own payment system. As per RBI guidelines, payment aggregators and payment gateways dated 17/3/2020, payment aggregators are considered as part of acquiring bank definition since they handle merchant payments. Regarding GST exemption, it has been clarified that payment aggregators regulated by RBI qualify for the exemption specifically for settling transaction up to 2000 when processed through credit card, debit card, charge card, payment card. However, this exemption applies only to settlement function, does not extend to payment gateway services. Only settlement function will enjoy it, not payment gateway. If they only provide payment gateway, that is only technology, then in that case they will charge for the gateway services. That is not exempt. When they act as a acquiring bank, then in that case exempt is available. Clear? Yes. Okay. You read this example with the key difference. I have also provided the key difference. Read this fully. Read this, then I will show you. Done. Yes. Read payment aggregator. Okay. See the key difference. Done. Okay. Now, next exemption clarification. Important. Let me first explain it to you, then we'll read. See, you remember government or local authority receiving service like repair of street light. Now, street light maintenance is a function entrusted under the Constitution 243G, 243W of the Constitution. Based on these two provisions, government or local authority is required to give this service. Now, repair of street light service, this there are two exemptions: pure services, that is only service, or composite supply. Composite supply where goods element does not exceed 25%. Majorly service. These are the two exemptions that are there. But it has to be a constitutional function under 243G, 243W of the Constitution. Now, what if local authority headquarter maintenance service, facility management services, housekeeping, maintenance, facility management services which is received for its headquarters, whether this will enjoy a exemption? Now, maintenance of its own headquarter, is it a constitutional function? Answer is no. GST is applicable. See, maintenance of park is different. You maintain park, that will enjoy an exemption because maintenance of park is a constitutional function that will enjoy an exemption. Not maintaining your own headquarter. Maintaining your own headquarter is not a constitutional function to enjoy a exemption. That's what is clarified in this thing, that local authorities taking some service which is to maintain community assets or public assets, that is exempt. Their own facility, I mean their own headquarter, that getting maintained, that will not enjoy a clear with this. Yes. Okay, let's have a look. Wonderful circular. That's what it says. Okay, you can draw this and keep. Pause the video. Draw this. And yes, let's have a look. Clarification on GST applicability for facility management services for MCD headquarters. MCD is Municipal Corporation of Delhi. The example given in the circular is related to Municipal Corporation of Delhi, but it will apply to all municipal. Clarification was required on whether GST exemption applies to facility management services provided to MCD headquarters, particularly in the context of municipal function 243W of the Constitution. 243G is Panchayat related services, 243W is local authority. Clarification. The GST exemption applies to composite supply of goods and services to government or local authority, provided that value of goods does not exceed 25% the total supply, and services related to municipal function as per 243W of the Constitution. However, it is clarified that facility management services such as housekeeping, maintenance, horticulture to MCD headquarters do not fall within the scope of municipal functions under 243W. Consequent, GST is applicable on these services at applicable. Obviously, this is not exempt. Clear? A good circular brings something which is sensible. Yes? Okay. Now let's move on to reverse charge mechanism and eco. There is one amendment from 1st April 25 that will apply only Jan 26 onwards. Otherwise, let's see the exemptions for RCM. Okay. RCM, there has been one important change. Let's understand that important. Okay. First, let me tell you the entry which was there earlier. Then I will explain you what has happened. See, sponsorship service. Now, sponsorship service provided by any person to partnership firm or body corporate. This was the entry. Correct? You remember? Sponsorship service provided by any person to partnership firm or body corporate is covered under RCA. So supplier could be anyone, recipient has to be a partnership or body corp. What they did, they added other than in supplier, other than body corp. This is the What does this mean? It means that if the supplier is a body corporate, now it will be covered by forward charge. So if the supplier is a body corporate, providing sponsorship service will be a case forward charge of reverse charge. We are with you stay strong with the entry because anything which is not covered under RCM will be a case of forward charge. This will be a case of forward charge because if the supplier is body corporate, it is excluded from RCM. It is excluded from RCM. It has to be a case of forward charge. Clear? Then commercial property. The residential property, they have not changed anything. Residential property given to a registered person, RCM. That is a plain entry. Supplier status does not matter there. But commercial property, they have made one change. Commercial property renting. See, commercial property renting, supplier, recipient. Supplier has to be unregistered, recipient has to be registered. Only then RCM will apply. This specific combination has to be. What specific combination? Supplier is unregistered, recipient is registered. Now what they have done is, here they have added other than composition dealer. Other than composition dealer. So if composition dealer is receiving commercial property on rent, no RCM. Then sir, forward charge? Yes, forward charge. But if the supplier is unregistered, then he might not charge GST. That is true for all cases. See, please understand one. It does not mean it is exempt. There is no GST because there is no taxable person to pay. Careful. Let me take an example. Tea vendor. Tea is taxable. Tea vendor, if his turnover is below registration limit, then he will not charge GST. That doesn't mean it is exempted. There is no GST at all. Same way, if the supplier is unregistered person, recipient is composition dealer, it's a forward charge case, but GST will not apply because supplier is unregistered. So be careful about this particular provision. Be very careful that if the recipient is a composition dealer, RCM will not apply. This is a benefit. There are only two cases in the law where other than composition dealer is mentioned in RCM. One is security service. Even in security service, same wordings is there. Second one, now commercial property renting. No other place is the exclusion as you just learned. And this other than body corporate for supplier, there are three cases in the law. Three places in the law where supplier other than body corporate is mentioned. One is security. Second one is renting of motor vehicle. And now the third one is sponsorship. Clear? Yes. Okay, let's have a look at the entry. RCM removed for sponsorships is provided by body corporate. Body corporate is providing it. RCM will not. See, old entry is very simple. Sponsorship service provided by any person to partnership firm or body corporate. New entry says sponsorship service provided by any person other than body corporate to partnership firm or body. Then renting of commercial property to composition taxpayer is removed from RCM. Old entry, renting of mobile property other than residential provided by unregistered person. Now same wordings, renting of immobile property other than residential provided by unregistered person to registered person other than a person who has opted to pay tax under compose. Careful on. And you can just make a note of this so that you are very well aware of everything. You can just pause the video and write this. And okay, this is a simple circular. Tell me one thing, local authority or government providing service to business entity. This is covered by RCM. We are aware of this. That local authority providing service to business entity taxable under RCM. What about Delhi Development Authority providing service to business entity? Now, Delhi Development Authority, the question is whether they are local authorities. Now, what is the job of Delhi Development Authority? So basically, the Delhi Development Authority, or Bangalore, we have BDA, Bangalore Development Authority. Maharashtra, there will be some development. They allocate land, commercial, residential, at places far away places. So, are they local authorities? The answer is no. They are not local authorities. That's why it will be taxable under forward charge, because they don't maintain a municipal fund. See, who is a local authority? Only when he has a local fund or a municipal fund, they collect some municipal taxes, then they become local authority, not Delhi Development Authority, which is a governmental authority. They are government authorities. They are not local authorities. So, government authority to business entity will be taxable under forward charge. You draw this and now you have a look at this. You read it once. And okay. Okay. Now let's move on to the changes which have happened in input tax credit. Fairly simple changes. The bigger changes will happen on 1st April, that is food service distributor. Not applicable for September 25. September 25 SD is same as previous exam. Okay, block credit 17.5, one entry has been slightly changed. There is an entry, any tax paid under section 74, 129, 130. 129 and 130 is deleted. And for 74, they have mentioned up to FY20, because 73, 74 will come to an end by 23, 24. There is a new provision added, 74A. Because of that, 73, 74, 74 last only up to 31st March 2000. That's it. For any period after that, we will use 74A. Now, why did government remove 129 and 130? 129 and 130 both did not have any tax. See, it says any tax paid based on 129, 74. 74 is notice for fraud, that can have tax. 129 is a penalty. There is no tax at all. 130 is confiscation, which has redemption fine. There is no tax at all. So there is no tax at all in these two cases. So it was just a error which was there. Now they have corrected. Okay. Then the next circular is on e-commerce operators. So basically, whether e-commerce operator is required to reverse ITC when they are paying tax under section 95. Let me take an example of Swiggy. Swiggy has two supplies. One is own supplies. On own supplies, they pay tax under 91. And then they have restaurant. Restaurant services, they pay tax under 95. Now, restaurant services, let me tell you, restaurant service has a concessional rate of 5%. But it has a condition that anyone who is providing restaurant service at 5%, they will not get ITC. So whether that condition of no ITC will apply to Swiggy when they are paying tax under 95? The answer is no, not apply to. The simple reason for that, Swiggy, when they are paying tax under 95, they are going to purchase anything related. They are only paying tax on behalf of the restaurant. So government has that for Swiggy paying tax under 95, there is no need at all. Nine. Is it a good clarification? Very good. Plus, they've also said that whatever is the liability of 95, that has to be paid through e-cash led. That's obvious because there is no ITC relating to this 95. Whatever is the liability of 95 not be paid through e-credit, it paid through e clarification on in tax credit for e-commerce operator under section 95. ECO required to pay tax under 95 make supplies under two counts. So there are two services. Supply is notified under 95 for which he is liable to pay tax as if he is the supplier of said service and supply on his own service by providing his electronic platform by charging platform fee or commission from users. The issue is whether ECO is required to reverse ITC where ECO is liable to pay tax under 95. It is clarified that ECO is liable to pay tax under 95 are not required to reverse ITC on input and input services under 17(1) or 17(2). Full tax liability under 95 should be paid only through cash led. ITC availed on input and input services used to facilitate such supplies cannot be used to discharge 95. However, it can be used to discharge tax liability on those own service. Whatever is their ITC, that ITC they will use to pay this, not restaurant service. This has to be paid through cash. Clear with this? Yes. Okay. Okay. This is an important circular. Very important for examination point of view. Listen to me very carefully. See in case of works contract. See, I'll give you an example. There is a supplier, Hero Limited. We will call him as OEM. Is OEM, sir? Original Equipment Manufacturer. OE. Original Manufacturer. Because he manufactures the original. Correct. Yes. Now, they supply bikes to dealer. Now, this is their factory. Let me tell you the risk and reward pertaining to the bike is transferred at the factory. That is called as X works contract. What's the meaning of X works contract? X works contract meaning the risk and rewards of that particular bike, whether there is an increase in price, whether there is a damage, whether it gets lost, everything is on the dealer the moment it leaves the factory. Risk and rewards are all transferred here only. Hero Limited might arrange the insurance, might arrange the transportation, but entire risk and rewards is shifted the dealer at the factory. This is called as X works contract. Now the question is, when can dealer avail ITC? Because there are six conditions to avail ITC. Try to recall. First one, you have the invoice. Second, you have received the goods or services. Third, supplier has paid the tax to government subject to section 41. Fourth, you have filed a valid return. Fifth, supplier has uploaded the invoice or debit note in his GSTR1 and it is communicated in 2B. Last one, ITC is not restricted under section 38. If even a single condition is broken, then no ITC. For this, yes, we are aware of it. Now, the question is, when have you received the goods? When can you say you have received the goods? Physically receive the goods, or at the time when the goods are handed over to the transporter factory? When can you avail ITC? Now, these dealers were taking ITC the moment it was handed over to the transport. Because the moment it is handed over to the transporter, the moment transporter receives it, it is as good as dealer has received because all the risk and rewards are on the dealer. Correct. This was the argument. Now, if you recall, bill to ship to transaction, section 16 provides for a case of bill to ship to, where billing is done to one person, shipping is done to the other person. The goods are received when the person to whom it is shipped has received the goods. Then, in that case, the registered person can avail ITC. Same way, in this case, the moment transporter is handed over the goods, technically, dealer has received it. It is a deemed receipt. Dealer does not have to wait till physical receipt. The moment it is handed over to the transporter, dealer has actually received the goods. And is it, sir? It's a very, very good circular. Signifies that you actually receive the goods, not when you physically receive, but in X works contract. And the property in goods gets transferred. The moment property in goods gets transferred to you, you have actually clear. Yes, this is an important question. This will be asked in your exams. What they will say is, it was handed over to the transporter in Jan, physically received in Feb, and you are solving the question for Jan. Then can you take ITC? As you are solving the question for Jan, you can take ITC in Jan. Because moment transporter has got the goods, you have actually seen. We are with this. Okay, let's have a look. Circular number 241 dated 31st December 2020. Clarification on ITC availability under clause B section 16.2 for X works contract. Issue. In automobile sector, contracts between automobile dealers and OEM. OEM in our case was Hero Limited, are often based on ex works contract. Property in goods passes to the dealer at the factory gate of the OEM and handed over to transporter. Transportation and insurance may be arranged by OEM, that doesn't matter, on behalf of the dealer, but claims for loss must be lodged by the dealer. The risk and rewards are all with the dealer. Dealer avails ITC on the date the vehicles are built and handed over to transporter. However, some authorities believe ITC can be availed only after physical receipt. GST department was saying only after physical receipt, not otherwise. Only receive the goods, then you can avail ITC. At the dealer's business premise, leading to show cause notice for wrongful availment of ITC under 16. Clarification. 16.2 starts with a non-obstant case, notwithstanding listing conditions for ITC availment. 16.2b states that registered person is entitled to take ITC only when the goods are received. Explanation to 16.2b provides for deemed receipt of goods when supplier delivers goods to recipient or any other person their direction. The direction may be given during or before movement. The goods are delivered by transfer of document of title or other. There is a concept of deemed receipt. Under X works contract, goods are handed over to the transporter at the factory. Transportation and insurance are arranged on behalf of the dealer. Dealer is responsible for claim of losses. Thus, property in goods is transferred at the factory gate. The goods are deemed to be received by dealer at this point, even though physically arrived later. Obviously, there will be exceptions. If the goods are diverted for non-business use, ITC will not be available. If the goods are lost, destroyed, stolen, disposed, then again ITC is not available because of block credit, which you are already aware, aren't you? Yes. Uh, Okay, now let's see some amendments which have taken place in payment of GST, registration, TDS, TCS, even. A very small point, registration. Now, revocation of cancellation, section 50. There used to be a lot of courts. It used to go to the courts, and courts used to give various reasons as to why revocation should be done. And there used to be a lot of problem with regard to revocation of registration whenever there is a cancellation of registration. So now every time amending the act is not practically possible because all the provisions were given in section. Then they moved on the provisions from act to rules. Rules are easier to change because government can change. But there was no power in section 30 to the government to frame rules. Now section 30 has a clear point saying that revocation of cancellation will be subject to conditions which may be prescribed. And these conditions are already prescribed. Everything is already done. It's just that it was not there in the main law. Now the main law gives the power to the government to prescribe it. Clear? Let's see. Section 30. New proviso under 30 subsection 2 has been incorporated so as to provide for enabling clause to prescribe conditions and restrictions for revocation of cancellation. Entire thing remains same. This power has been added. Provided further that revocation of cancellation of registration shall be subject to such conditions and restrictions as may be prescribed. Such conditions and restrictions as may be prescribed. Just the power is added. Okay, then registration rule 8 has been amended to say that if a person who has not opted for Aadhaar authentication, he will still have to go to a facilitation center, and going to the facilitation center, photograph will be taken and original copy of the documents will be shown at that facilitation center. Only then the application is deemed to be complete. If you don't opt for Aadhaar authentication, photograph will be taken on the facilitation center. You show the original copies, and thereafter only the application is deemed to be submitted. Then ARN will be generated, application reference number. Okay, this is just a procedural point. As such, question will not be asked. Then one amendment relating to Rule 138. See, Rule 138, government has clarified one position. And what is that position, sir? You remember that if both are unregistered, supplier is unregistered, recipient is unregistered, then generating e-way bill is optional. That means you can generate, correct? But how will unregistered person log in to e-way bill portal? Because he is unregistered. How will he log in? There was no facility. Now, this unregistered person, any of them, can submit a enrollment application, ENR. Enrollment application, ENR 03, on the common portal. Once they submit this enrollment application, they will get a unique enrollment number. And using this unique enrollment number, they can log in and generate e. Same thing will apply to interstate handicraft goods. Remember interstate handicraft goods? Interstate handicraft goods up to 10 lakh, 20 lakh, they are not required to take registration. But interstate handicraft goods, there is mandatory e-way bill, correct? They have to mandatorily generate e-way bill. You remember this? Now, as they are required to mandatorily generate e-way bill, the question is, how will they generate e-way bill when they don't have a login at all? Same thing. They can file this ENR 03. They will get a unique enrollment number. Using that unique enrollment number, they will generate e. Clear with this? Yes. Let's have a very small point. Let's read. Amendment to Rule 130. Information to be furnished prior to commencement of movement of goods and generation of e-way bill. A proviso has been inserted to lay down that unregistered person who is exempted from obtaining registration under 24 1 or 2 and generates e-way bill for interstate movement of handicraft goods irrespective of the value of consignment shall submit the details electronically on common portal in GST ENR 03 either directly or through a facilitation center. Similarly, an unregistered person who opts to generate e-way bill on the common portal shall submit the details electronically, again same form. Once details are validated, a unique enrollment number will be generated and communicated to the said unregistered person. And using this unique enrollment number, they will be able to generate e-way. Okay. Now coming to Invoice and returns. Invoice, again, we have discussed this, again a repetition. Now, say suppose you are unregistered. Now, if you are unregistered, supplier is unregistered. And it is a case of RCM. Who will generate invoice? Supplier is and it is a case of RCM. Then recipient will do a self invoicing. What will be the time limit for issuing self invoicing? The time limit for issuing invoicing is 30 days from the date of receipt of goods. Have we learned this? So he has to issue the invoice within 30 days from the receipt of goods or services. Now, what if supplier is a person who has TDS registration only? You remember TDS registration? Government department takes TDS registration like CBI. They have taken only TDS registration because they keep receiving goods or services. On that, they will have to deduct tax at 2%. That is TDS under section 51. So, if supplier has only taken TDS registration, then who will do the invoice? Government has said that this supplier will be regarded as unregistered person for this provision. Wonderful. So, for this provision of self invoicing, CBI will be regarded as a unregistered person. That means recipient will have to do a self. Clear with this? Yes. Okay. It's an important point. They can ask you. Then uh, there is one point relating to GSTR 7. GSTR 7, all these TDS people, they have to file GSTR 7. Now they used to argue that we have to file GSTR 7 only only in the month when there is a deduction. When there is no deduction, no need to file GSTR 7. Now the law has been amended saying that even if there is no deduction, they will still have to file GSTR 7. So if there is no deduction, file nil TDS. And if you don't file nil TDS, still the late fee is zero only. But now it is mandatory file GSTR 7. Clear? Okay, let's have a look at this. Invoice and return. Section 31. Time limit to issue invoice. Section 31 of CGST Act has been amended so as to incorporate a NA provision prescribing time period for issuance of invoice by recipient in case of reverse charge mechanism applies. Further, an explanation has been added to provide that supplier who is not registered shall supplier who is not registered shall a supplier who is registered solely for the purpose of deduction of tax under. So if you have taken registration only for TDS, it is as good as you are unregistered person. Section 47A prescribes that the registered person who is liable to pay tax under 9394 shall issue the said invoice within 30 days from the date of receipt of the said supply of goods or services. Okay, then GST return section 39(3) has been amended to mandate electronic filing of returns for each month by registered person required to deduct tax. STR 7. Irrespective of whether any deduction has been made in the said month or not, it empowers government to prescribe rules, forms, manner that you are aware. This point is just told again. GSTR 7 filed whether or not there is any deduction in the calendar month. It is mandatory to. Okay. Okay, moving on to refund. Refund. Okay. So very cosmetic provisions. I mean, there has been very small changes in refund, no major change. So the first amendment is Section 60. This amendment is made to highlight that refund of tax paid on zero rated supplies and export of goods or services can be claimed under Section 54 of CGST. See, it is not that prior to this amendment there was a difference of opinion. Same was, even at that point of time, Section 54 was being used to claim a refund for zero rated supplies or export. Now it is explicitly provided. That's it. There's no change in your computation per se. It is only explicitly provided that zero rated supplies, where can you claim refund? Section. Otherwise, people were taking a position that once it is a zero rated supply, you can claim refund under any provision. Refund provisions come from Section 54. There you can claim refund. Let's see. Even prior to this amendment, refund was being claimed under Section 54, read with the rules. Now it is explicitly provided that refund would be in accordance with Section, so that people don't take any other position. That's the whole point. Okay. Then, if any goods are subject to export duty, then no refund. No refund. So earlier, this point was applicable only for unutilized items. Now they have made a general statement that if some goods are subject to export duty, no refund under any provision will be allowed. So they have made it wide. When is export duty levied, sir? See, government generally levies export duty when government does not want you to export that goods. Like when the supply of onions in India is less, they will levy export duty so that you don't export onions. Now they want you not to export onions, but you are still doing it and you want a refund. Do you think they will give? No. Let's see. No refund in case goods are subject to export duty. Earlier, the condition of no refund in case of goods are subject to export duty was applicable only to zero rated supply of goods where refund of unutilized ITC was being claimed. Now, there would be no refund of unutilized ITC or IGST paid on zero rated supply where such goods are subject to export. Now, it's a clear statement that doesn't matter whether you do export with payment of GST, without payment of GST, do anything. If goods are subject to export duty, you will not be eligible for one. Clear? Okay. Okay. Another small point, section 70, because after that we come to an okay. Summons. What is a summon? Is calling the person be present that he can provide the evidence in person. So summons were issued, and if summons are issued, then that person has to attend in person. This was the provision. Now, this created a lot of issue in the industry that GST officer were summoning the CEO or CFO of a company. How is it practically possible that CEO, CFO travels, then comes and sits in this summon? He is not aware of every transaction. GST is only one component of business. Now there are so many other components of business, financial management, have your policies, you have so many things, so many decisions which they are involved in. That's why now the provisions very clearly state that if a summon is issued, then either in person or by a authorized representative. That means now there is no necessity of that person being required to attend it. He can send a authorized representative. Is it a good point? The answer is yes. It's a very good. Okay. Section 70. Summon. Subsection 1A of section 70 has been inserted to enable an authorized representative to appear on behalf of the summoned person before the proper officer in compliance of summons issued by the said officer, which reads as follows: all persons summoned under subsection 1 shall be bound to attend either in person or by authorized representative. Either you can attend in person or by a authorized representative. As such officer may direct, and the person so appearing shall state the truth during examination or make statements or produce such documents or other things as may be required. So now summons can be attended by a authorized representative also of that person being present. Clear? Okay. Now, as I told you, 73, 74, there is a sunset clause. Financial year 23, 24 will be the last year where department will issue notices under 73 or 74. 73 and 74, wherever it is there, na, everywhere 74A has been added. It is not added only at one place, that is block credit. Block credit you just read now. Block credit you saw 74, 129, 130. 129 is deleted, 130 is deleted. 74 is not replaced by 74A, or it is 74A is not added. Except for that one place. Wherever in your entire textbook there is 73, 74, it will now also read with 74A in all the provisions. Okay. Now, what is this 74A? Now, let me explain you what was 73 and 74 on a brief note, not in full detail, briefly. 73 dealt with notice and order for other than fraud, willful misstatement, suppression of facts. Notice and order for fraud or other than fraud. Other than. 74 dealt with fraud, willful misstatement, suppression of facts. What was the time limit? The time limit for notice was 2 years, 9 months, and time limit for order was 3 years from the due date for filing annual return, and if it relates to erroneous refund, from the date of erroneous refund, in from the date when such refund was erroneously paid by department. Here it was 4 years, 6 months, and 5 years. So there used to be a lot of confusion as to which is a case of 73, which is a case of 74. Department used to feel that everyone is fraud, and we used to feel no one is fraud. Cases used to go to courts just on one aspect, whether it is a case of fraud or not a case of fraud. This used to happen. So technically there was a lot of problem. Correct. Now what government did is government combined both these things and brought 74A. 74A will deal with fraud as well as other than fraud case. And there is only one time limit. So that means now there will not be any dispute on whether it is a fraud case or other than fraud case, because the time limits are same. The time limit is 42 months from the due date for filing annual return or date of erroneous refund. Same, 42 months is 3 years, 6 months. Correct. So they have come in between 4, 6 to 9. They said, let's come in between 3 years, 6 months, 42 months. And time limit to pass an order is 1 year from the date of issue of notice. Plus, there can be an extension of 6 months. This is how it looks. Now, if you total everything, it will come to 5 years. 3.6, 3.5, 1.5. Total 5. Clear with this? This extension is be taken with reasons to be recorded in writing, but obviously they can record the reason in writing. This is how it looks. Now, there used to be penalty here and penalty here. Here, the maximum penalty was 100% in fraud cases, while other than fraud cases, it was 10% of tax or 10,000, whichever is higher. You remember? Correct? Now, let me tell you, this is retained as it is in the timelines have changed. There it was 30 days, here it is just by 60 days. If you pay within 60 days, nil penalty, 15%. So all those timelines are changed a bit. But the distinction of whether it is a fraud case or other than fraud case is still there for penalty. So the combination has been done only for time limit to issue notice and time limit to give order. But the penalty provisions, which was some discounts which are allowed in penalty also, now you get some discount if you pay within that time, if you pay within this time, penalty you get some waivers. That is still kept as it is even in 74A. So 74A, for time limit to issue notice and time limit to give order, for that they have clubbed it into one provision. But penalty waivers are in two provisions. Even now, in 74A, there is a distinction between fraud and other than. All other provisions are almost same. Will make you read it. You'll be able to see that you have already seen these provisions while reading 73 and 74. And then you can come back and write this. Okay, let's see. 74A. Determination of tax not paid, short paid, erroneous refund, or ITC, wrongly availed or wrongly utilized. These five things are still same. Tax not paid, tax short paid, erroneous refund, wrongly availed ITC, wrongly utilized ITC. For these five things, notice can be issued for any reason from FY 24-25 onwards. New section 74A has been incorporated so as to provide for determination of tax not paid or short paid or erroneous refund or ITC wrongly availed or utilized for any reason pertaining to Finance 2025 onwards. It also provides for same limitation period for issuing demand notice and orders in respect of demand, irrespective of whether the charges of fraud, willful misstatement, or suppression of tax are invoked or not, while keeping higher penalty for cases involving fraud, willful misstatement, suppression of tax. So there's a higher penalty. Show cause notice. Let's see. If a person is chargeable with tax not paid, short paid, erroneous refund received, wrong availed ITC, wrong utilized ITC, proper officer shall issue show cause notice. The notice requires a person to explain why unpaid tax, interest, or penalty should not be recovered. Threshold limit in a financial year is less than 1000 rupees, then don't issue a notice. This is CGST because you are reading CGST law. Proper officer shall issue notice. Service name issue. There is no need for Notice to be served within 42, should be issued within 42 months from due date for filing annual return for concerned financial year or date of erroneous refund if applicable. This point is same. Additional statement be issued for other tax period. So instead of issuing a new show cause notice every year, if the matter is same, which will normally happen in rate disputes, because if there is a GST rate dispute, it will continue not just for 1 year, it will continue in subsequent years also. So if there is such case, then proper officer may serve a statement subsequent to the notice containing details of GST not levied or short levied. This is same as previous. Statement will be deemed to be show cause notice. Let's see the penalty. If case pertains to other than FMS, 10% of tax or 10,000, whichever is higher, same as 73. If it is fraud, 100% of tax, same as 73. Waiver of part or full penalty is as follows: if tax interest penalty, if any, is paid. All proceedings are said to be closed if below mentioned amounts are paid. Before service of notice, if you pay tax penalty and penalty if it is applicable. Other than FMS, no. FMS 50. I think you'll get a 74A question. You don't have to read 73 and 74. But Institute has kept 23, 74 in your module, 74A in the module. Both are there in the module. Before service of notice, no penalty here, 15% here. Within 60 days of issue of notice, see carefully. No penalty here, 5%. Now, in 73, 74, this was 30 days. Within 60 days of communication of order, no relief. 10% or 10,000, whichever is higher. Here, 50% of tax. Actual penalty, 10% of tax. Or so it's almost same. It's just that 30/30 is now replaced by 60. So if you have read 73, 74, you actually have an advantage because you already know what it was. It's very easy to remember these. Yes. Okay. This point is also same. If it is a self-assessed tax or any amount collected at tax and you don't pay within 30 days from the due date of payment, then waiver of penalty for other than MMS is not available and penalty will be imposed. That means this nil penalty, you give a arrow, no relief. If it is a self-assessed tax, you yourself are declaring it to be a self-assessed tax. When does it become a self-assessed tax, sir? When there is a mismatch between 1 and 3B. You yourself are saying that 1 you have to pay more. It's a self-assessed tax. Then in that case, if you don't pay that self-assessed tax, then you'll not get a waiver of this nil penalty. You'll have to pay 10% of tax or 10,000, whichever is higher. And all this is under CGST. And please don't double it for SGST. Don't double any percentage of tax for SGST because SGST is separate, CGST is amount you'll have to double because 10,000 in CGST, 10,000 in SGST. Clear? Okay, now let's see this order. After reviewing taxpayer's response, proper officer will determine final tax interest. Order must be issued within 12 months from issue of SCN. Careful. This is different. 12 months from issue of SCN. Once you have issued SCN, within 12 months. If PO cannot issue order within this time, the commissioner or officer authorized by commissioner, senior in rank to PO, but not below the rank of JC. It should be at least JC level, joint commissioner level. Can extend the deadline by up to 6 months. And reasons to be recorded in writings. 12 months plus 6 months from issue of SCN. Careful, careful. Be very careful with the words. They will ask you a question on 74A. Okay, then these are same. When we say all proceedings of the notice will come to an end, it does not include prosecution. Prosecution can still continue. Is it, sir? Yeah. Prosecution, jail provisions can still apply. Closure of connected person. Say suppose notice was issued against Mr. A. If Mr. A's proceeding is closed, transporter's proceedings will also be. But this does not apply for 129 and 129 has a separate penalty for transporter. 130 also has a separate redemption fine for transport. In case notice in the proceedings is issued to main person and some other person, and the proceedings against main person are concluded, then the proceedings under 122 and 125 against other persons are deemed to be concluded. But careful, not 129 and 130. 129 and 130 proceedings will still apply. And the term suppression definition remains same. Non-declaration of any facts or information, which is very, very wide. You don't declare something which is required to be declared in the return statement, report, or any other document, or there is a failure to furnish any information on being asked for in writing by the proper officer. And in all the provisions, reference to 74 has been added. You are aware of. Yes. Now, do you remember a penalty under 122 1B? What was this, sir? Now, what was 122 1B? It was a penalty on the e-commerce operator. If e-commerce operator does not follow the law, meaning he allows a person who is unregistered to sell through e-commerce when he is actually not allowed. Say suppose unregistered person is not allowed to do interstate supply, but this e-commerce operator allows him to do interstate supply. Penalty will apply on such e-commerce operator. Now CBIC has clarified that 122 1B penalty, which is on e-commerce operator, will apply only for the person who is required to collect tax under section. So section has been amended. Section now says 122 1B penalty will apply on every e-commerce operator. No, only e-commerce operators who are required to collect tax under section 52. Wherever TCS is applicable, only such e-commerce operator will be subject to this liability, not every e-commerce operator. Clear? Okay. Then maximum pre-deposit under 107 and 112 are revised. See, earlier it was admitted liability plus 10%. Maximum was 25 crores. Now it is replaced with 20 crores. This is CGST. For IGST, it will be 40 crore. So if you want, you can write IGST 40 crore. And don't double this 10% of tax. Tax will automatically double for IGST. Need to double percentage of tax. Never ever double percentage of tax. Okay, appellate tribunal admitted liability plus 10% of tax in dispute in addition to amount deposited before appellate authority. This is appellate authority. So 10 here plus 10 here. So earlier it was 10 plus 20 additional. Now it is 10 plus 10. Here also maximum 20 crore for IGST. Okay. Now appeal to appellate tribunal. The provisions have been amended that government may notify date of filing appeal because appellate tribunal provisions are incorporated. Now tribunals are getting set up. You need one office, one space, need all that. Na? All that is now in process. Revised time limit will be provided. Plus, department has now got a Condonation. Department can file an appeal within 6 months plus 3 month condonation. If you remember, in class we used to discuss this, saying that government has missed out providing a condonation of delay for department. For assessee, it was 3 months plus condonation of delay 3 months. For department, it was 6 months plus zero. Now that zero has gone, is 6 months plus 3 months of condonation. Totally, it has become 9 months. All other provisions are same, like on payment of 74A, everything will be waived off. That conclusion. Pre-deposit for 129.3, 25% of penalty. This is same. Admitted liability. Liability will always include tax interest. So this is same. So just 20 is replaced by 10. Condonation provided for department. Okay. Oh, we have come to the last segment, customs and FT. Now, what changes have happened in customs and FT? Largely, customs is same. The one, remember import of goods at concessional rate rules 2022. There, you had to give monthly statement. Now, monthly statement is replaced by quarterly statement. All the activities in this import of goods at concessional rate of duty, now it has become quarterly. Wherever month was written, has been replaced by quarter, and they have defined quarter. Quarter means 3 calendar months ending on last day of March, that is Jan to March, April to June, July to September, October to December. Plus, in your textbook, you'll find rule 6 to 10. Month you will replace by quarter for frequency of filing statement. In rule 7 also, you'll replace month with quarter. Repeat it for 8 and 9. In 10, time limit for use of goods. That was 6 months. Now you are given more time, 1 year, and month is replaced by, that is same. But earlier, if you import something under this concessional rate scheme, you had to use it within 6 months. That 6 months is now replaced by 1 year. So, based on the rules, make these changes in your textbook immediately so that you are very clear on this. Replace month with quarter, one place. Replace 6 months with 1 year. Clear? Okay. FTP, there is one trade facilitation measure reduced where government will do consultation with the industry stakeholders. It will take their views, and if they are not accepting their views, they will give reasons. Oh, is it, sir? Yeah. So that has been added as a step, but not get a question per se as such, but a good point has been added. Trade facilitation measures introduced with an option available to central government for consultation with relevant stakeholders to seek their views, and also providing mechanism on best endeavor basis. They will try to inform the reasons for not accepting the views concerning formulation or of F. So government will try its best to inform why government is not accepting the views of the industry. Say suppose industry asks for an amendment that in FTP, please change this. If they ask in FTP, please change this, and obviously industry keeps doing this. Now, when industry asks for it, government never used to give a reason. Now government is saying we will try our best to give the reasons also as to why we did not accept the views given by the industry. So it's a good step, and let's see how it will happen in the times to clear. With this, we come to an end of amendments. Let's quickly go through all the amendments, and this will act as a quick revision of all the amendments. You can just watch the last day your exam. So, supply chapter, two important cases are added in negative list. First is co-insurance premium. Co-insurance premium apportionment will not be liable if lead insurer has paid GST on full insurance premium charged from the insured. Second one, reinsurance commission will not be liable if reinsurer has paid full GST, the reinsurance premium without deducting reinsurance commission. Extra neutral alcohol, undenatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption is now outside GST, but it should be used for manufacture of alcoholic liquor for human consumption. Vouchers, be very careful. Vouchers, if it is prepaid instrument, it is money, no GST. If it is not prepaid instrument, it is an actionable claim, again no GST. Okay, what about some activities which are carried on like marketing, promotion, co-branding that will be liable to two transactions, principal to principal, principal to agent. Principal to principal, sale and purchase of vouchers, no GST. Principal to agent, agent charging commission, GST will be applicable. Unredeemed voucher, there is no supply, so there is no question of GST. Regulated entities like banks levy penal charges. That penal charges is for breach of contract, GST will not be applicable. Time of supply for vouchers is actually deleted, but for September 25 you have to read because the change was made in Finance Act 2025, which is yet to be notified. Section 13, services RCM. Now there are two parts. If supplier is registered, 61st day from invoice of supplier or payment. If supplier is unregistered, then recipient will raise a self invoice, date of issue of invoice by recipient or payment. And he has to issue the invoice within 30 days from receipt of goods or service. Place of supply, if it's online services, then recipient address should be recorded by the supplier. At least the state name should be recorded so that the tax can correctly flow to the recipient state. 11A has been added. If there is a common general practice in the industry, government can waive off government can waive off the entire non-levy or short levy completely. There will be no GST applicable for such general practice as government may notify on the recommendation of the GST Council. Changes in entries. First, any training partner who is approved by National Skill Development Corporation will now enjoy an exemption. Transmission or distribution utilities. Doing any of the two, you will get the exemption for all ancillary services related to electricity. Motor vehicle accident fund, what they receive from insurers, no GST. Payment aggregators, they collect and then pay it to the merchant, will enjoy the exemption if the amount of transaction is up to rupees 2000 because they are acquiring bank. But payment gateway will not get the exemption. Then MCD, headquarter cleaning, that is not a constitutional function, that will be liable to GST. Sponsorship service, if body corporate is providing, forward charge. Renting of commercial property, if the recipient is composition taxpayer, no RCM. Delhi Development Authority is not a local authority, they will not be eligible for any RCM entry, they will have to pay under forward charge. Block credit reference to 129 and 130 is deleted. 74 will be applicable only till FY 23-24. E-commerce operators, those who are paying under 9.5, for that 9.5 they don't have to do any other reversal of ITC, but that 9.5 amount they will have to pay through e-cash ledger only. X works contract. The goods are set to be received by you when you have actually got the property in the goods. The moment it is handed over to the transporter, it is handed over to the transporter on your behalf, you will be eligible for ITC. You don't have to wait for physically receiving those goods. Okay. Then section 30, enabling provision given that government can make rules. Registration, if you have not opted for Aadhaar authentication, then photograph taking plus original copy to be given at the facilitation centers. E-way bill, unregistered person or interstate handicraft good, that unregistered person, they can file ENR 03, take a unique enrollment number and generate e-way bills. Section 31, time limit has been added, 30 days from the receipt of goods or services. RCM, recipient has to do a self invoice. If supplier is only registered for TDS, they are regarded as unregistered person. GSTR 7, nil return, they have to file it. Refund, no major change, just one important thing, export duty. If export duty is applicable, then no chance of getting a refund. Someone, either he can attend in person or authorized representative, very important point. 74A is added. Now there is no distinction between fraud and other than fraud for issuing notice and order. Issuing notice, time limit will be 42 months from the due date for filing annual return or erroneous refund, as the case may be. Time limit for order is 1 year from the date of issue of notice plus one extension of 6 months, which can be given by commissioner or an officer authorized senior to the level of the proper officer, not below joint commissioner. But penalty provisions, even today, distinction is there. For other than fraud cases, even today it is 10% of tax or 10,000, whichever is higher. Plus, if you pay before service of notice, 0, 15%. If you pay within 60 days from issue of notice, 0, 25%. Within 60 days of communication of order, other than FMS, no relief, 10% or 10,000. FMS, 50%. In any other case, 10% or 10,000, 100%. Self-assessed tax not paid or amount collected representing as tax and not paid, then penalty will apply. You'll not get the waiver even if you pay within 30 days. And this they have not paid within 30 days from the due date of paying such tax. Then you know this explanation, all that is same. E-commerce operator penalty 122(1)(b). It will apply only for such e-commerce operators where eco is responsible to pay the tax, collect tax under section 50. Pre-deposit, very important. First level, admitted liability plus 10%, maximum 20 crores. Second level, admitted liability plus additional 10%, maximum again 20 crores. Time limit to file appeal, government can give revised timelines, and department will get 6 months plus condonation of delay of 3 months. Then customs of FTP, in concessional rate of tax, they have defined quarter, and they have said wherever in all these rules month was there, replace it with quarter plus 6 months. That is time limit for using those goods is replaced by 1 year. Government has extended. FTP, government will try its best to give reasons why it has not accepted the views of the industry. Wishing you all the best for your exams. Do well, study well, take care. Bye bye.